Hello and welcome to the weekly wrap-up, where joining me to discuss the market movers this week is FX analyst from ForexLive, Mike Paterson. So Mike, global shares are on track for a weekly rise today, with Europe following Asia higher after the ECB announced their stimulus plan and bond market concerns were eased. However, how are you expecting bond yields to perform in the longer term?
Not an easy one really at the moment because correlations are not as they were. We have been seeing some firming up in yields, and that's kind of when we get a swift, a sharp rise in yields, which we saw a week or so ago. We started to see a turnaround in the dollar, suggesting that a lot of those bund plays were being sort of taken off, the hedges were being taken off, and the bond trades were being unwound. So we're basically seeing some dollar sales, euro purchases, which was behind a lot of the euro strength, and obviously the markets have been taking close interest on those. Today we saw euro have another early morning rally, but then the 10-year US bund yield spreads started to rise and widen a little bit, and by about 3 or 4 basis points at one point, and that was helping the euro back down onto its lows again. So there's no doubt there is a focus on there for the moment, but the correlations aren't quite as clear as they have been. And I've been around in foreign exchange long enough to know that people love to give reasons after the event. I think really looking at how these bunds are going to perform and how equities are going to perform too far out, I really do feel is a bit of a futile exercise. I know people always want to look ahead, but sometimes it's a dangerous game.
The Bank of England members' vote on whether interest rates should be changed is to be held next Wednesday morning. B.of.E. Governor Mark Carney has hinted that interest rates may rise gradually, but are you expecting a vote in favour of a rate change?
No, I'm still seeing a 9-0, to be honest. There's lots of consensus. It would appear, judging from the inflation report this week, from both Carney and Shafik, but the consensus now was that interest rates will more likely go up rather than down. The market knows that now. The market believes that now. I remain unconvinced over timing. I've been someone, if you look back at my record on ForexLive, who's been putting off these interest rates, saying how dangerous they would be, but essentially for impact on household debt in the UK. I think it's a very dangerous game to start raising rates. And we're seeing that spill over into the States, the data with stronger dollar cutting into economic performance and economic recovery as well. And we've seen that in the UK. And I'm thinking it's still a very dangerous game to go and hike rates anytime soon. Forecast consensus seems to be for the first quarter of next year. I think that'll be the earliest we see it. I really do. I was surprised to hear Carney say he thought inflation would start to, increase quite dramatically towards the end of this year. I'm not quite sure where he's getting that one from. If we are to see, a real big sort of surge back up towards the 2% target, then of course, you've got to start looking at raising interest rates. But it is very, very delicately poised, and I don't think the Bank of England is in any great rush to put rates up right now.
And lastly for today, which key indicators will you be looking out for next week? Are there any potential surprises in store for us to keep our eyes on?
Yeah, we've got a busy week ahead actually, Sam. We're starting off nothing much on Monday. Tuesday we've got the RBA minutes coming out in Asia, given everything that's been going on recently with the Aussie, and Stephen's trying to talk the Aussie down and debate on whether they cut or won't cut again anytime soon. That'll make interesting reading. We've also got UK inflation data on Tuesday and Eurozone inflation data plus ZEW. So we'll be looking at those in the European zone. Moving on to Wednesday, we've got those Bank of England minutes we just discussed. And of course, we've got the all-important paranoid, frenzied base FOMC minutes on Wednesday as well. So lots to look forward to next week. I think we've seen some great volatility in recent days and weeks. Liquidity isn't so great, I don't think, and I think this all making for a very fragile market. But there's plenty going on out there, and as far as the Fed's concerned, we're looking for every single little clue we can. But I think we're looking a little bit too, myopically sometimes. And hopefully the minutes next week may give us more of a picture, but I think they're going to be keeping their cards fairly close to the chest.
Thank you, Mike. For more updates and to see how the markets are shaping up next week, join Monica Gibson for the week ahead on Monday. Goodbye for now.